welcome. You're watching BTTV. This is Market Today. Market Today. I'm Tanya Aneja coming live to you from Mumbai, and with me is Shail Bhatnagar, our markets editor from Delhi. Well, we are seeing a tug of war between bulls and bears amid volatility. But what should be your strategy going forward, and where are the markets headed? We'll discuss this and lots more. But first up, the top headlines for you. Indian stocks are likely to breathe easier on Tuesday as overseas cues from Wall Street improve for the bulls. Meanwhile, safe haven gold futures rally sharply as war clouds deepen further over the Middle East. Local sentiment on Dalal Street is likely to consolidate at current levels as bulls try to win back initiative on their side. However, firm crude oil futures and forthcoming quarterly earnings will set the trend in the near term. Very good morning, Shell, as always. And, if we talk about the market failed to extend the momentum seen last week. However, the Nifty 50 has managed, to defend the 19,500, 19,450 area amid volatility. But now experts believe that quarterly earnings, as we rightly pointed out, that will set the trend in the near term. So where do you see Nifty at this point in time, and what should be the strategy now for the investors?
Good morning, Tanya, and good morning to all our wonderful viewers who are joining us from different parts of India as also across the world. It's Tuesday, and the first and foremost thing that will be on the mind of investors is the fact that Nifty, as you rightly pointed out, was able to defend 19,500 from the bears, although it ended about 140 points lower, but 19,500 still remains with the bulls, and that's a bit of a heartening development, Tanya. But overall, if you see yesterday's trade, and the screen is in front of you in the form of a daily chart, the sell on rise strategy remains the best bet for the index. Bulls have defended the key level of 19,500, but the trend is flat to sideways, and even if overseas cues show some kind of improvement, which you can see across Asia, you can see on Wall Street as well. The point is that firm crude oil prices, and now gold has also started rallying. Both these charts will be visible to you on a daily format on the screen. The fact remains, Tanya, that bulls remain on a back foot, and sharp intraday rallies that you see on the index will have to be sold into. The crisis that is there in the Middle East remains as a dark cloud on as far as sentiment is concerned on Dalal Street, and that remains visible in the net sales number of foreign institutional investors. Yesterday they sold sales of about on a net basis 1,000 crores for the 5-6 trading sessions that have gone by in the month of October. The total number stands at a negative 8,000 crores. So the commentary and the underlying granularity of the market remains on a negative basis. It favors the bears, or let's just say it's a sideways to weak consolidation. And as far as the options chain is concerned, the daily chart will show you very clearly that there is a cluster of EMAs which is preventing the Nifty from moving upwards. So 19,600, 19,650, 19,550 are zones where there are very, very strong resistances, both in terms of option writing, which are preventing the Nifty from moving upwards, and the support remains at 19,450. Interestingly, if you watch the option chain in great detail, you will also see positions being built on 19,200. So that's a fresh or a long-term support level which Nifty bears are looking at, or Nifty bulls are looking to defend. Depends on which side of the equation you are. So that is what is the state of play. Yesterday's advanced decline ratio on the Nifty was 1:9. None of the index heavyweights ended in the green. Even TCS, which came out with a very strong news of a buyback, actually ended in the red. So that's the status as far as Nifty is concerned. Extreme caution is wide or advised on the long side, and the fact remains that any rally from an intraday support level, just as it happened yesterday from 19,480, will be sold into as far as the bears are concerned. Tanya.
Okay, absolutely. So extreme caution that is advised, on the long side. But Shall, let's talk about Nifty Bank as well. That made a new low of 43,796, and which was a sign of weakness yesterday. And it was trading, around the previous
Yes,
swing lows of 43,700 to 43,600, which can be, which experts believe can be tested
absolutely.
over the next few trading sessions. But what are you looking on Nifty Bank at this point in time?
So Nifty Bank, Tanya, is weaker than the Nifty. All 12
Hmm.
components of Nifty Bank ended in the red yesterday. There was heavy profit booking when it comes to PSU counters, and all the gains that were there on an intra basis on private sector banks like HDFC Bank, ICICI, Kotak, and Axis were sold into. The chart that you see in front of you is Nifty Bank, and the index is now near a 1 month low, the lowest level that you've seen in August, mid August. So that's the selling pressure that's evident on the Nifty Bank. Again, any rallies that you see will be sold into, and positionally the Nifty Bank is looking on a short that seems to be testing the 200 EMA, which is fairly close. The daily chart is not at all conducive for bulls as far as the Nifty Bank is concerned, and any mild or brief rally towards an upside will most likely to be sold, given the weakness that you see now even in coming in the PSU banking basket. In any case, PSU banks were never index heavyweights within the bank Nifty, but even index heavyweights, whatever were the intraday highs yesterday on HDFC Bank, ICICI, Axis, SBI, and Kotak, was sold into. So that shows that at mid-August close, Nifty Bank is most likely to test the 200 DMA. And if you look at the options chain as far as Nifty Bank is concerned, it's 43,000 that has opened up. It's extremely bearish as far as Bank Nifty is concerned, Tanya.
Okay, absolutely. It can test 200 DMA. That's the word coming in. Okay, that's the verdict on Nifty Bank. But let's talk about FNO space. I mean, FNO space as well, Shell. Lots of action happening there as well. So, what are you looking at the FNO space today?
Tanya, genuinely, I don't wish to put out 2 or 3 stocks or charts. This is not a market which is conducive to strength as far as the bulls are concerned. So it's best to, remain sideways, wait for this market or this sentiment to pass, and then, maybe take a position 4 or 5 days later. It's not necessary to work every day in the market. You can just chill, relax, watch price data, and keep the faith that bulls will be back. But for the moment, I don't see any great long side trade coming in, which would consistently pay money. Yes, strength is seen in FMCG. Yes, strength is seen in pharma, but these are defensive counters and they move contra to Nifty. And if Nifty is weak, it doesn't make practical sense to be long on individual stocks. So it's best to remain out, pause, reflect, look at data, and then maybe wait for the things to turn in your favor and do a nice swing trade on the upside. So it's going to be, a market of attrition. Dhire, 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 it'll edge lower. And once it reaches a certain support level, then we'll start batting. At the moment, the
I think
batting is in the World Cup.
I think you said it, Shell. Whether it's life or whether it's markets, it's always important to pause and reflect. But okay, let's now talk about global
Absolutely.
markets also.
Yeah.
We are getting positive cues from the global markets. If we talk about Wall Street only, Dow added almost 197 points,
Yeah.
and Nasdaq also gained around 0.4%, and S&P 500 that added 0.6% as well. Oil prices they also jumped 4%. As the Israel-Hamas conflict extended into its third day. But I want to understand from you that what is now essential to track, from all these overseas cues.
So, sentimentally, Tanya, there is another commodity that's showing very, very consistent
Gold,
gains, and
yes.
that's safe haven buying that's happening on gold futures. You'll see the daily chart in front of you. As the dollar index gained strength, gold fell for 9 days in a row, and it is from here, because of the conflict in the Middle East, that you are seeing very, very strong demand coming in. Crude oil futures, as you very rightly said, remain firm, 4% higher, around 86 $87 a barrel. That is the two things that I am tracking. All that jumps that you see on Wall Street were just, dead cat bounces. They are in pain as well. But, we have a far more intelligent person in joining the conversation than me, at least. Welcoming Mr. Dharmesh Kant, Head of Equity Research at Cholamandalam Securities. Dharmesh ji, a very warm good morning to you. Welcome on Market Today at Business Today Television. Tell us, how do you see sentiment on the Lal Street, and what are you advising clients to do?
Yeah, good morning. I mean, still it's a tentative kind of an environment. I mean, sentiment-wise, people are not very sure how this is going to turn out. Heartbreaking and sad, the type of casualties which we have seen, and maybe it can go up likely. But markets are concerned about the financial impact, and financial impact will only happen if there is a supply disruption in the ecosystem which is there. So as of now, we don't see that happening. And I mean, latest update has been some truce kind of I mean, plea has been made by Hamas, so they want to come onto the table for talks. If that is the environment, then this is, I mean, it has been happening for many years, which is sad, but it's through there. And then, I mean, okay, into the earnings season, the expectation is very high, and aggressive buying may happen. As far as the entire environment is concerned about the people, it's the general sentiment is like this is a one-off thing, and historical bit of evidence just suggests that this is a good buying opportunity. It will not escalate to the extent that happened in the Russia-Ukraine kind of situation, when there was a total supply disruption after the COVID thing which has happened. So as long as that is not happening, it's fine. But yeah, too early to predict as of now whether this is the course of action which will be followed. My own sense is that let's wait and watch for at least a couple of days more before jumping into a buying spree.
Right, Dharmesh bhai. Any picks that catch your attention at current levels? What are you advising clients? Anything that catches your fancy on the mid cap, small cap side, or even a blue chip that you feel should be a part of long-term portfolio via systematic purchases over a monthly basis?
I think systematic purchase over the monthly basis is the best option in the current scenario, and one has to now look up to large cap rather than mid cap and small cap because I think, see, there's nothing fundamentally wrong with the small cap or mid cap basket. The earnings have been good, the business is doing well. But the problem is the kind of valuation they are sitting on. There has been a huge run up in stock prices. Whosoever is worth his salt. So they have gone up significantly. But large cap do give us an opportunity to have a good buying or cherry picking out there. And there, I think if you blend the mix of growth opportunities as well as margin of safety and the consistency in the business performance over its multiple vectors or verticals, has been Reliance Industries. I mean, all its business division, be it oil to gas or Reliance Jio or retail, they all have been doing particularly well. And management has already cited the value unlocking to happen over the next couple of years, and that is where the real juice is. Business have been growing well. I mean, all the verticals, especially the retail and geo vertical, has been clocking growth in excess of 15-16%. And we did a SOTP, that is sum of part of business valuation over a period of next 2 years, that is FY26, where we were looking into. And there, the valuation of Reliance Industries comes out to be around 4,200. So at 2300 or 2200 kind of levels, it looks very attractive. Risk to reward ratio is again very attractive at current levels. If I mean, unfortunate playoff events turn out and market does go down further. So Reliance Industries is also correct. So it's a systematic accumulation kind of a zone. 1900 to 1800 is the lowest level which we are looking at Reliance Industries. The upside is 4200. To be accumulated in every dip is what we have been recommending a client at this juncture.
Okay, absolutely. Good morning, Mr. Khan. This is Tanya joining in the conversation. Mr. Khan, we were talking about IT stocks yesterday, and the second quarter corporate earnings season is all set to begin tomorrow. We have TCS numbers, we have its buyback also, and then we have HCL Tech and Infi that will be reporting its numbers on 12th of October. So I want to understand from you that what should be the strategy ahead of the numbers, especially if we talk about these large cap IT names.
Yeah, good morning, Ms. Tanya. See, as far as earnings is concerned, I don't think there would be any surprise out there on the QT numbers. They would be largely muted to in line. I mean, it will be very much like what they did in Q1 numbers. So there won't be anything which will, on the numbers front, that is the P&L front, there won't be any surprises out there. If it happens, even it will be a surprise for the market. It will be a business as usual, and the problem out there is the discretionary spend will also see some more dip in this quarterly earnings when they update. What market is looking forward to is the type of deal wins they would be announcing going forward. If there is an upward trajectory or some visibility of silver lining out there, then that would be great for IT companies, and maybe one or two more quarters of pain, and we are through this. So no major fireworks. I mean, single digit revenue and profitability growth, mid-single digit is what we are expecting in INR terms. I'm not talking about constant currency or the dollar terms. It will be a muted guidance even this time around with the kind of yields which US is witnessing. I don't think the Indian IT companies are basically a consulting firm. They are on the software side. So there, the business growth is very difficult to come by. It's a different story for AI, ML, and generative AI kind of environment where things are still rosier out there. So, with the kind of run-up which we have seen, we have not recommending our clients to sell IT stocks as of now. We would like to see at least the Infosys TCS management commentary and update or interview, and then we will take a call on that whether to accumulate more or to just stay invested. So no selling as of now, but hold to what you have already bought is what the recommendation is.
Okay, absolutely. So no major fireworks. That's the word coming in. But
Yeah.
if we talk about mid cap IT space, stocks like Birla Soft and KPIT, what are your thoughts there?
Tanya, what has happened in all the mid-cap IT space is it's more of a expectation run-up which has happened. All these companies have done some kind of a tie-up with their counterparts in US who are into generative AI. So the point here is the business has not come. It's only a tie-up which has happened, and over a period of time, 1 year, 2 year, when Indian IT firms, the mid-cap space, they develop that expertise and they have that manpower skill in place to cater to those software development, numbers will start trickling in. But these tie-ups, I mean, going forward, that is what will be the world would be. So this will definitely provide a good opportunities for the revenue and the profitability traction, and that is where the build-up has been. So I don't think I mean, this financial year you won't see any number playing out in a major way. Maybe FY25 onwards, you will see that trajectory of the growth which has been expected may start trickling in. So again, the advice is again same. I mean, Buildersoft or KPIT Technologies or KPIT is a different game from Buildersoft particularly. We are recommending them to. We have also recommended them to buy at earlier levels. So again, hold is the recommendation out there. So IT in whole is more of expectation play right now rather than meaningful business change happening, and which I don't see happening at least for this financial year. And cloud is still murkier in US, so whether this will actually happen in FY25.
Right. Dharmesh, you've shared your views on how IT is likely to perform during and post earnings. What are the bright sparks in terms of sectors and stocks specifically, if you can share, where you look at outperformance both in terms of financials as also in the market in the forthcoming earnings season?
See, as far as financials are concerned, outperformance is clearly spelled out for all the NBFC space or BFSI space. We have seen the kind of update they have given for their quarter two, be it private sector banks, public sector banks, or the NBFC. They all have been on a very sweet spot. Any growth in excess of 15 to 20% kind of an AUM growth they have been saying. And the good part is even the public sector banks have reported this time around a very good AUM growth when the festive season was pushed ahead. So like PNB came out with 14% kind of an AUM growth, Jammu and Kashmir Bank came out with 12%, Bank of Baroda was 16%. So they were earlier less than 10% kind of an AUM growth. So that space is clearly buzzing and rocking. At the same time, asset quality has been improving consistently, and now it becomes a very decent asset quality to look at. I mean, it's the best asset quality for last 10, 12 years. So this sector is definitely going to outperform. You have to do your cherry picking out there. I still believe that public sector banks will get related to the valuation multiples or nearby to the valuation multiples which private sector banks have. So there's a plenty of scope out there. Any correction out there should be bought into. And from there, Canara Bank and Bank of Baroda remains the top pick. Apart from financials, the other sectors which are likely to do well is automobiles. We have seen the numbers of all the two-wheelers. It's 20% kind of an growth on an average for two-wheelers, three-wheelers, and passenger vehicle. Even commercial vehicle segment has reported 5% kind of a growth on a quarter for Q2 on a year-on-year basis. So that sector will be buzzing because input prices are already benign. So operating margins will be stable. At the same time, top line and profitability growth will be there, followed by defense and railway stocks. So they will continue to do well. They support good numbers, and I mean, the businesses are lumpy, but overall trajectory is very good for them. So they would be posting good set of numbers. So what I am really worried about was IT, which I have already sounded, and the next is the pharma space, which I am not very particularly gung ho about. I think the valuations are far ahead of their numbers which are likely to come. It will be 12 to 13% kind of a growth, but multiples have already risen to 25, 30%. So that is where the challenge would be.
Fair point. And let's wait for pre-open rates to trickle into us. Remember, the GIFT Nifty is pointing to a nice green uptick in initial trades. At least the Nifty shut shop around 19,500 yesterday, down about 141 points, a correction of about 500 points on Bank Nifty as well. 43,886. Those were the data that we saw as of yesterday, and we are waiting for initial market ticks to come in. Well, it's a red tick on the Nifty. We'll let these prices settle down and then show you some sensible ones. At the moment, down about 50 points at 19,457. Remember, yesterday's low was 19,480. Any consistent move below with that will result in selling pressure increasing as far as the index is concerned. Now let's pay attention to index heavyweights. The Nifty now at 19,472. Okay, let's look at what is happening on HDFC Bank. Down 0.74%, 1505. What is Infosys telling us? Down 0.5%, 1469. How about TCS? Flat at 3638. Let's look at Reliance. The initial quotes point to an uptick, 0.3% higher, 2305. Let's look at what Bajaj Finance is doing. Remember, it's the weekly expiry of the Fin Nifty today. Flat at about 8037. Bajaj Finserv flat at about 1621. How about the other three corporate banks? Axis Bank down 0.3%, 993. ICICI Bank, you see a red tick, 936, 0.2% lower. And how about Kotak? Flat at about 17, 19 at the moment. How about Hindustan Unilever? This was a bright spot yesterday. Down 0.5% at 2505. Okay, Nifty is now ticking in the green up 33 at 19,546. Remember, these are initial trades. The market remains fairly volatile. Let's pay attention to the F&O space beyond the index heavyweights. Selling pressure seen on Deepak Nitrite, 1% lower, 2050. Siemens down 1%, 3510. Tata Communications down 0.5%, 1800. Let's look at top gainers here. Okay, it's going to be a pharma day. Glenmark 4% higher, 815. How about okay, Bandhan Bank 1.4% higher, 250. HCL Tech 1.5% higher, 1268. Titan in the green 1% higher, 3300. The Nifty now consolidating, 19,568, 55 points higher. How about NSC 500? Let's look at the top gainers here. Anything interesting? Reddington, this is a high beta counter, 160, up 4.5%. Masgaon Docs, 1.75% higher, 2110. You have HUDCO, 2.5% higher, 8990. You have Oil India, 2% higher, 318. This is how the markets are in the initial part of the pre-open. We'll wait for them to settle further, and we are also at the moment awaiting the presence of Vinay Rajani. He's a senior technical and derivative analyst for retail research at HDFC Securities. So far, a fairly tepid opening. Tanya, I had mentioned that you'll see a green tick in the early part of trade. Let's see how this rally shapes up. And of course, the sell-on rally around a specific resistance on an intraday basis remains the best trade as far as Nifty is concerned. We'll stick to Dharmesh ji and take his view on mid caps and small caps. Dharmesh ji, very, very sharp rally, and somehow they remain unaffected both at the index level as also the ones that you see moving around in the high beta space, low ticket space. How do you see mid caps and small caps overcoming the problem that we see in the Mid East? Is this something to be worried about? How are SIP inflows into such funds that buy mid caps and small caps?
See, Bhatnagar ji, देखिए, what is the issue here is that mid cap and small cap are particularly largely illiquid kind of a basket. You can't, I mean, participation is low, and the people who venture into that after doing their due diligence are there for a long-term haul. It's not more of trading kind of an activity. I mean, large caps are largely where trading activity mainly takes place. So if somebody is buying into those names, so they are buying for 2 to 3 years kind of a perspective. And that is point number one. Point number two is most of these companies which we have seen a traction presently in like auto ancillary or some of the other segments of capital goods or railway infra, defense. These are particularly domestic centric companies. So I don't think any, I mean, even if the supply bottleneck problem happens out there, so the companies which are into chemical and agrochemical space, they are the ones which will be hit the most rather than the kind of stocks rally which we have seen in the mid and small cap basket. So they will largely remain insulated, even if this I mean, the problems blows up to a larger extent. And the profitability and everything will be fine. The only worry point was, as we discussed, that it's more of a valuation kind of a thing. So some time correction may happen out there. I don't think price correction will happen to an extent where the damage is there. 10-15% kind of a correction can always happen, but let's not forget they have already done up 50-60% in this year since March. So I mean 10% just for a market correction is okay with them. At the same time, when we speak to HNIs, so they are, I mean, in fact, they're asking whether we should be adding on to more position in those space. So there we have recommended that let's see it for a while. Let's see the Q2 earnings and then we can jump into that. But capital goods space, auto ancillary space, particularly the EV side, these baskets are budging. I don't see anything negative happening out there.
Okay, absolutely. Mr. Kant, let's talk about Tata Steel as well. This stock will be in focus today, and it was among the top losers yesterday also. So Fitch Ratings, they have upgraded Tata Steel Limited's IDR from BB plus to triple B minus, and the rating agency has upgraded the rating of $1 billion notes also, which were issued by TSL's subsidiary ABJA Investment. So I want to, ask you about your thoughts on Tata Steel and where's the stock headed going forward?
See, Sana, the problem with Steel is that it has multiple vectors in Europe, and there the problem lies. I mean, this rating upgrade news is definitely a positive for them, as the cost of funds will come down a bit because of this upgrade. But business-wise, the difficulties still remain where they are. I think Europe is going through already a slowdown, and their steel units out there won't be in a position to make a profitable business out there. I mean, metal consumption, the story is completely different when we look to domestic consumption in India. But internationally, even all the metal prices are almost flat to year till date. So there has not been any movement in the steel prices. In fact, steel prices in international market was down around 8% last week on a week-on-week basis. So that trouble is brewing and it's continue to brew even more hot. So I don't think Tata Steel, business-wise, if you look at the consolidated or merged entity, the problem is getting resolved sooner. It will continue to face its own set of problems. If you are looking at steel companies, I mean, they are much better domestic plays. I mean, JSW still remains the topic out there, followed by even Steel Authority of India. It's seen a complete, turnaround, and the company is
Right, sir.
doing very well. Yeah.
Right. That's how Dharmeshji sees the broader markets. At the moment, Nifty settled 53 points higher at 19,565, and the Nifty Bank, the likely opening tick at about 150 points higher, 44,027. As good a time to welcome Vinay Rajani, Senior Technical and Derivatives Analyst for Retail Research at HDFC Securities. Good morning, Vinayji. How do you see the Nifty for today, and one or two stock picks that you can share before markets open, sir? Welcome and good morning.
Yeah, good morning, Shailji, and thanks for having me on the show. So market is broadly in the range of 19,500 to 19,800. There is no clear-cut directional. So momentum is missing right now, and follow-up buying and follow-up selling both are missing. So yesterday we saw a weak close on Bank Nifty and Nifty, but we did not see any short build-up in Nifty future segment in yesterday's session. That is a good sign. And today there is a good support from the global markets. So again, we can expect a sharp bounce back from this level. But on the upside, if you were to see the 19,675 to be precise was the previous swing high. So that will act as a resistance and that will give some hurdle at that level. So again, at higher level, one should remain cautious because overall, if we see lower tops, lower bottoms are there on the daily chart. So unless we see that is getting changed on the upside, higher top, higher bottom formation is still missing. So I would rather say 19,675 is a strong resistance. If we were to close above that, then we can say we are out of woods and again we can resume the uptrend. But till then, market is likely to remain in the broader range. So 19,500 where maximum open interest is there in the put side if you were to look at the 12th October expiry, and 19,700 to 800 there has been a call writing at that strike prices. So overall, I believe that market is going to be remain in the range. If we close above 19,675, then definitely we will change our view. And from the consolidation and zigzag move, we will enter into a bullish momentum phase above 19,675. So as of now, stock specific action we can expect in the market. So as you said, recommendation. So definitely the stock which has been doing well was the DLF. See, real estate index was performing very well, and DLF actually day before yesterday, we on Friday we saw a very good closing. So yesterday there was some profit booking, 1.5% fall was there. But looking at the primary trend, I think DLF can do well in the coming days. So 540 is the price that around which one can go long for the trading, and stop loss can be kept at 530. On the upside, we can expect a target of 555. The second pick I would take from the pharma space. So overall, it is a defensive space, and during yesterday's session, we saw some of the pharmas doing well, like Aurobindo, Sun Pharma, and Dr. Reddy. So Dr. Reddy, one can go long around 5495. stop loss can be kept at 5410, and on the upside we can expect a target of 5620. So both these peaks are for 2-3 sessions purely for the trading, and with the appropriate stop loss which I mentioned, one can go long.
Fair point. We had caught up with the pharma space yesterday as well. Very, very sharp traction coming in these frontline counters, Dr. Reddy's and Divi's lab in particular. Staying with you, Vinayji, where do you see some strong traction in the mid-cap space despite the overall weakness that we see on main indices, which is the Nifty and the Bank Nifty? Which mid-caps are looking good to you?
So we have to be very selective in mid caps, because yesterday's close was not that convincing, and technically speaking, Nifty mid cap index has closed below its 20 days exponential moving average for the second consecutive session. So overall, I am a bit cautious because result season has started, and we have already seen a rise of 6 months for last 6 consecutive months. Small cap and mid caps have given fantastic return to the investors. So now result season has started, and because of that, we may see some profit booking in the some of the stocks, most of the stocks which have already risen. So I'm a bit cautious right now. We may see bounce back today in large caps, but mid caps one should remain cautious. But there are some fertilizer stocks looking good, some PSU stocks in mid cap segment which are looking better. So selectively we can go long fertilizer space in mid cap segment, and PSU space we in mid cap segment one can go long if we see some recovery in the mid caps from here. So overall, I'm a bit cautious in the mid cap, but yes, so fertilizer and PSU stocks can be looked at for the short term trading.
Morning, Mr. Rajani. Tanya this side. We were talking about IT stocks before you came, and we were discussing about the large cap ITs and the mid cap ITs. We have TCS results tomorrow, and then we have INSEE and HCL Tech as well. So, what should be the strategy, and what do the technical charts suggest for these IT counters, especially ahead of the numbers?
Yeah, so is it for me?
Yes, it's for you.
Yeah, so definitely for last 4-5 sessions we have seen a significant rise in the stock like TCS, and but yesterday's close was not that convincing. After initial rise, it closed near the lows, so it is called a bearish shooting star pattern on the daily chart. Though it has not confirmed, today we may see again buying, but in last 4 session it has already gone up. And I would suggest that if somebody wants to trade on the long side, one should stick to the large cap stocks, because mid cap stocks are not looking that convincing on the short term charts. So Infosys, HCL Tech. HCL Tech is another counter which is looking convincing. In yesterday's session, we have seen long build up, almost 6% open interest build up was there in HCL Tech. So large cap stocks definitely can be looked at overall. And right now, rupee is also depreciating against the dollar. So everything is supporting, and some positive announcement from the result side could take some stocks on the higher side. So I would go selective in the IT space. HCL Tech especially looking good, followed by the TCS. So
Right, sir.
yes, definitely large cap stocks can be looked at.
Right. We are waiting for the initial ticks of the Nifty. It's 9:15 a.m. The Nifty opens 65 points higher, 19,575 in front of you. The defense of 19,500 yesterday seems to have enthused bulls on the long side. Okay, it's a 200-point jump on Bank Nifty, 44,070 for you. The Nifty IT index opening 125 points higher, 32,420, and the 500 index up 0.5%, 17,214. Let's immediately pay attention to index heavyweights. HDFC Bank first, 1523, up 0.5%. Infosys up 0.5%, 1482. What is Reliance doing? Up 0.4, 2307. It's a nice green tick spreading across the index heavyweight space. The Nifty up 80 points at 19,595. The first resistance has been taken out. The second resistance is at 19,664. Let's see how it happens. It's a gap up of about 65 points, and beyond that 25 fresh points have been added by the Nifty. Let's look at other banks. I want to see what Axis is doing. 0.5% higher, claims back the 4-digit mark, 1001. How about ICICI Bank? 941, 0.3% higher. TCS mildly in the red, 3632. Infosys 0.5% higher, 1481. So the underlying thread is fairly strong. Okay, Nifty has crossed 19,600, is now up 91. 250 points higher on the bank Nifty, 44,132. It will be interesting to watch the Nifty 9650 put for October 23, 12th October. We'll take a look at it fairly shortly. Okay, in the FNO space, what's sticking? It's the high beta that's doing extremely well. Escorts 3.5% higher, 33.18. Adani Ports 2.5% higher, 810. Motherson Sumi 91.85, 1.5% higher. Banks are doing very well after yesterday's thrashing. RBL Bank 2% higher, 248.70. PNB returning in the green, 1.5% higher, 74.45. Can Bank 370 in front of me, 1.29% higher. MCX 2100. We'll shift focus immediately to NSE 500. Okay, it's going to be a defense day. Masgaon Dock 5.5% higher, 2182. Cochin Shipyard 4% higher, 1076. What else? Bombay Stock Exchange 2.5% higher, 1415. Gujarat Pipavav Port 3% higher, 133.45. Bharat Dynamics, another defense play, 1.8% higher, 1022. Remember, the deteriorating security environment across the board is now prompting many governments to look at how the terroristic attack happened in Hamas, and defense counters not only in the Indian market but even in the US markets were up in trade yesterday. Let's shift focus immediately to Vinay. A nice uptick, Vinay. It's already a bit early, but how do you see this gap up on the Nifty? At the moment at 19,600, 84 points higher. One, what would you do on the index? And two, anything interesting that catches your fancy when it comes to technical charts in the first 4 or 5 minutes?
Yeah, so definitely opening is quite convincing, and it has crossed the 19,600 and 19,675, the previous swing high. So definitely I am looking forward to it. If 19,675 surpass, then we can expect some more short covering. And yesterday's low was 19,480. That is that can become the higher bottom also. So for the traders, 19,480 will remain stop loss for the trading long positions, and that should be protected for holding the long view. So I would suggest that as of now, 19,483 for 500 is a strong support, and with that stop loss, one can keep long positions. And some of the stocks can see some short covering. So basically, I suggested DLF, so real estate stocks can do well, and some of the bankings can also bounce back in the rally. So we need to wait for 10-15 minutes more. If markets sustain at higher level, then definitely we can look for the some long trading opportunities in the large cap space.
Fair point. Tanya, see the move that is happening in Zomato. That basically shows that the broader market sentiment on the long side is back with a bang. Remember, these are low ticket, high beta items, and they attract traders of all sorts, sizes, and shapes. Zomato up 4% at 108.90. I'm going to show you a lot of high beta counters that are doing very good in today's trade. HBL Par 1.9% higher, 283. Let's look at Paytm, 926, 2.3% higher. Angel One 2.3% higher, 2087. PNB, Mannapuram Finance, CSB Bank, Canara Bank, BHEL. These are all low ticket, high beta items that are doing phenomenally well as far as markets are concerned. Now let's do stock picking. Sticking with you, Vinay, Philips Carbon Black, fresh record high, 2,332% higher. What would you do?
Today's session where most of the mid cap stocks were witnessing profit booking and selling, but this is the stock which is continuously doing good for last 4 consecutive session. It has been rising and stock is trading at its all time high, so we should not anticipate the top. In fact, we should remain with the trend. So keeping a trailing stop loss, one can remain long, and the nearest support I can see for the PCBL is at 198. So keeping that stop loss in mind, traders should continue to hold on the long positions, and investors should definitely remain with the stock and stick with the stocks which is outperforming the overall markets.
Let's get back to Mascon Dock only, Vinay. because this company has signed an LOI actually with an European client for the construction of 6 firms and 4 optional units of 7,500 DWT multi-purpose hybrid power vessels, and the prices for the units would be firmed up at the time of contract signing. And on the back of this news, the stock is rallying in how. So let's pull up that stock for you. And of course, the Cochin shipyard counter as well. We are seeing strong traction there as well. So, Vinay, your thoughts on Mazgon Dock and Cochin shipyard?
So both of these stocks, primary trend is up definitely for last 2 3 weeks. They have been consolidating and not going down. In fact, we can say so. When uncertainty was there, the stock was consolidating. Did not see any panic selling. So overall trend is still positive. And looking at the Musdown dock, I would say it has got next resistance at 2284, which is the previous swing high on the daily charts. So 2284. So around 100 rupees upside we can expect. I would not give a view beyond that because the overall pattern is still into consolidation. So it needs to close about 2300 to give take a momentum view on this. So still into consolidation, 2285 is next resistance. And as far as support is concerned, 2080 is the support for the Musdown dog. So overall into consolidation, one can keep a stop loss at 2080 and one can expect upside resistance at 2285. So overall into a range, but yes, primary trend is definitely positive for the stocks like Mazgaon as well as for Cochin Shipyard.
Okay, and Mr. Kant, what about you? When we talk about these, defense counters, we have seen a stellar rally in the first half of the year. What about now? I mean, the situation now, Mazgon Dock and Cochin Shipyard. What are your thoughts?
See, again, I mean, all the defense stocks are looking very attractive. Only the valuation metrics has changed for many of them. So the juice out there for immediate next 2 or 3 years kind of a scenario is not there in each one of them. But yeah, the story-wise things are intact. If you ask me between Majgaon Dock and Cochin Shipyard, I would still like to go with Majgaon Dock because the valuation comfort is far higher out there and type of trajectory order book trajectory which they are sitting on is more profitable than what the Cochin shipyard is sitting on. So in the defense basket, HAL remains the topic, Hindustan Aeronautics, followed by, I mean, Majwar Dock. Data patterns is also very attractive. Keynes Technology is another stock. But these all ideas which we are discussing as of now, you can get a move for 5, 6, 10% in say 15, 20 days. But if you are holding on for say 2 to 3 years, they all are doublers from here. So this is how the things are placed. So traders can play with technical, levels. But investors, the firm advice is stay invested. There's no need to cash out from any of these defense technology. Even if, as a basket, if you are picking, you're better off.
Right. Let's pay a little more attention to how cash stocks are moving. But since you've pointed out Mazgaon Dock, Tanya, there's an interesting data. 6.5 lakh shares are traded. It's still 924 and it's 50% of the 5-day average. So it's going to be a fairly strong rally on Mazgaon given the volume interest that you're seeing. Let's look at all-time highs. In the Nifty 500, it's ITI Limited. This is a PSU company, 226.45, up 5.5%. Broking firm Angel One, 2.5% higher, 20,090. PCBL, the one that we had discussed, 2% higher, 203.40. TVS Motors and Kalyan Jewelers are the two other stocks which are at fresh blue sky territory. Now, what is clicking really well in the market space is of course the auto sector. Maruti at the moment fairly strong, clicking at about 10,369. Very sharp moving in coming there. Tata Motors 630.75. Very sharp move coming there as well. So autos doing pretty well as far as the broader themes are concerned, and it's led by the highest beta among them all, Escorts, getting Vinay here. Vinay 3.5% higher, 33.28. What are the charts telling you on Escorts?
So Escorts is totally into its own orbit. It has nothing to do with the market. It looks like that it is clearly holding its uptrend. And there is another stock from the auto space, which is TVS Motor, which is trading near its all-time high. So some of the stocks in the auto sector is clearly outperforming. One of them is Escorts. It is near to its all-time high. The previous swing high was seen at 3344, and right now it is trading at 3305. So I'm expecting it to surpass this high and likely to outperform in the. So trend is continuation of an uptrend, and we can expect it to remain outperformer. The second stock which I am looking forward to is TVS Motor, which is looking extremely good on the charts, followed by the Tata Motors. So as you said, auto space has been outperforming today, and overall trend for the Escorts, TVS Motor, and Tata Motor is looking extremely strong on the medium to long term chart. So yes, definitely, auto sector is doing well, and these stocks which I discussed can do well in the coming times.
Dharmesh, would you have a view on Escorts?
Yeah, it's a positive view, but it's very expensive as of now compared to other counterparts. And as our colleague pointed out, it's in its own orbit of its own and it's going extremely high. So one may enjoy the ride, the momentum with trading stop losses in place, and but it's not a fundamental buy recommendation from our deck. So what we have recommended is it's a fairly large auto basket. I mean, Hero Motocorp, TVS Motor, Eicher Motors, Maruti, M&M are the ones, and along with Tata Motors. These are the six stocks where a basket buy has been recommended by us, and that is where the focus is. And I am very sure the type of volume growth, these all companies will be giving around 10 to 12% kind of a volume growth on a year-on-year basis for next couple of years. And the margins will be stable because commodity prices have been benign, and I don't see them going anywhere far off too soon. So operating leverage, a good pricing power, new launches, everything is working out there. At the same time, the appetite for Indians to have more vehicles, multiple vehicles with the same families has been increasing quite large. So a good value buy. Scots is only one stock where valuation comfort is not there. But yeah, as a trading momentum play, it's always on. Just don't forget to keep your stop losses trailing out there.
Okay, absolutely. That's the verdict coming in on Escorts. And we should pull up Tata Motors as well. It's the top traded F&O stock as we speak, and very strong volume breakout there on Tata Motors. And it is actually trading near its 52-week high as well. So, Vinay, I want to come to you first for the technical check on Tata Motors.
Yeah, so for last 3 weeks, Tata Motor has been consolidating in the range of 633 to 608. So 30 rupees range was there, and now it looks like that it is on the verge of giving breakout from that consolidation. So and overall trend is positive as I previously discussed. So 633 is a level above which Tata Motor is likely to find some more short covering towards its all-time high. The all-time high is seen around 656. So above 633, we can expect Tata Motors to hit a new all-time high beyond 657, 656. So overall trend is good, and trading long position should be protected with the stop loss of 620.
Okay, 620 is the stop loss coming in on Tata Motors.
Okay,
What
Tanya.
about you, Mr. Kam? Yeah, please go ahead, Shell.
No, let's take a view from Dharmesh ji on Tata Motors.
Yes, please.
Yeah, thanks, sir. See, Tata Motors has what a turnaround.
Dharmesh ji.
Yeah, thanks. What a turnaround Tata Motors has seen from being a CV and domestic vehicle manufacturer to an international manufacturer. So, I mean, JLR is Tata Motors is basically a JLR play. Around 85% of its EBIT is coming through the JLR international sales. So, and that is where the traction is. And the latest update of the wholesale numbers, again, 17% kind of a growth has been there on the volume wise. So that continues to, I mean, have a good inroad and traction in a market like Europe and US, where other brands are also bringing. So, I mean, remarkable job done out there. And still, I think the way the margins are shaping up and the electric vehicles, the pickup which we have seen in India, and some support from the CV side in the Indian side, because they have been losing their market share to Ashok Lane out there. If there is some traction out there, then I see Tata Motors heading towards 750 to 800, because margins have been improving. It's likely to improve more. I mean, 14% kind of a EBITDA margin, they have given more than 100 basis point of an uptick in Q1, which is likely to continue going forward. So a good fundamental value buy from our end for Tata Motors. And one year upside target is far higher, 20-25% kind of an upside gain should be there.
Right. Since we will be shortly looking at a lot of options data, I'd just like to point out that the 6:30 call on Tata Motors is now trading at about 1435 rupees. Remember, it was somewhere like 8.5 rupees when the markets began. So it's already risen about 5 odd rupees. But the interesting part is what Vinay pointed out, that the stock is coming out of a 10, 11, 12 day sideways trend, and that is where option buying remains really very effective. The most recent high on the 6:30 call, as far as prices are concerned, is 35 rupees, now available at 14 rupees, up about 5-6 rupees in day's trade. This is no trade to be recommended on the long side, but this is something to be watched out. Let's get Vinay into the conversation. Vinay, any views on 6:30 call on Tata Motors? Should it cool down a bit from current levels?
So it looks like that it is going to give breakout. So today, looking at the pattern, I see some good development on the hourly chart, and momentum could be there. The consolidation which was there for last 3 weeks, I think it is likely to come out from that consolidation. So definitely we can expect some momentum buying in the 6:30 call option also, because momentum is there, and in option price to go up, we need a momentum which was lacking in the Tata Motors till now. But it looks like that since the morning it is out doing very well. So I'm expecting positive move in the 6:30 call option, and it is likely to give positive momentum, and one can trade long in the 6:30 call option in Tata Motors in today's session.
Right. And what's interesting, we'll continue to discuss Tata Motors a bit. Tanya, at about 9:33, when you look at the cash part of Tata Motors, about 29 lakh shares have been traded. Actually, 29 lakh 22,000 shares have been traded on Tata Motors in the first 15 minutes of trade. That's almost 0.4 times the 5-day average. So first 15 minutes, nearly 50% of volume done, which is over the past 5-day average, and a sideways trend, that is the stock that is coming out for. The Nifty Auto Index is up 1.3%. So it's a sectoral tailwind, it's a technical tailwind, and it's both volume and price that's ticking very well on the charts as far as Tata Motors is concerned. Let's look at some other stocks. BEL days high, strong blocks happening here, 138.65. The most recent transaction being of 85,782 shares. Before that, it was 1,21,000 shares. Strong traction coming in at Federal Bank, days high, 147.45, 92,400 shares traded. Your view, Vinay, on Federal Bank?
Yeah, so Federal Bank is one of the strongest bank we can say, because in last couple of weeks we have seen many banks falling from their swing highs, and now Federal Bank is one of the stock which is holding its uptrend and holding above the long term and short term moving averages. So overall trend is bullish. But if you were to look at the short term, it is still into consolidation. On the higher side, it is finding resistance around 150, 151 odd level. So at that, up to that level, we can expect this stock to do well. But once we see close above 151, then we can expect some more short covering. So definitely it is an outperformer. It likely to do well. And sorry. So likely to find the support around 145. So keeping that stop loss in mind, one can remain long. 151 is a strong resistance around which one can book profit and wait for the decisive close above that.
Okay, absolutely. Uh, got it. And, Vinay, let's look at some of the real estate counters as well and look at, Phoenix Limited, Phoenix Mills, and Godrej Properties. They are among the top gainers for you. 3% uptick there on Phoenix Mills, and, Godrej Properties also 2% uptick there as well. So, what are your thoughts on these, real estate counters, and any topics that you would like to share with our viewers?
Yeah, so since the in the morning itself, I recommended DLF. So
DLF,
overall,
yes.
yeah, so DLF was my pick, and on Friday we saw a very good closing, and I was expecting it to do well in today's session as well. So entire sector is doing well. If you look at the Prestige, Phoenix Mill, Godrej Property, and DLF, so this entire overall reality also. So entire sector support is also there, and DLF is the largest stock in the pack, so one can continue to remain long. The Phoenix Mill you talked about, yes, it is trying to come out from the range which was there for last 3 or 4 weeks. So on the higher side, 1900 is the level around which Phoenix Mill found a resistance multiple times. So we need to track this level closely. Above 1900, there will be a fresh breakout on the charts, and we can expect some more gains to come. But as of now, in this kind of market, if some sectors are performing really well, and out of that, we real estate is one sector which is doing very well. So one should continue to have the positive view for the entire sector, and I would stick to the DLF and followed by the Prestige Estate.
Okay, Tanya, it's about 9:37. Let's take a look at the Nifty now. Fairly well settled trade that we have as of now. 19,600 is a point of defense for the bulls. The index up 77 points at about 19,590. The Nifty Bank 44,100, 205 points in the green. Let's look at the option chain now. I have in front of me the Nifty option chain for the week ending 12th October, which is Thursday. Okay, a lot has changed for the positive. Firstly, at 19,600, the option is priced at about 78 rupees 90 paisa on the call side, and very sharp interest in addition in open interest at about 38,72,000. Let's get Vinay into the conversation. Vinay, because the fact that 19,600 has held for the first 20-25 minutes of trade, what would your view be on the long side? Is this something to be taken?
Yeah, so if I look at the daily chart, there is a strong resistance of 20 days exponential moving average. So to be precise, on 21st September, first time we broke below, Nifty broke below the crucial support of 20 days EMA, and after that it many times it found resistance on 20 days EMA. On previous swing high, that was on 6th October, when it hit a high of 90,675. At that time also it found resistance there, and at this point of time I can see 19,642 is a 20 days EMA. So again, it is near the resistance. We need to closely watch this level. As far as breadth is concerned, today again mid caps have started doing well. High beta sectors like auto, real estates, and banking have is performing well. So there is a higher probability that we will cross this resistance soon, because we are outperforming the global markets, and now today Asian markets are also performing well. So bias is towards on the upside, more on the upside. So I'm expecting this resistance to be taken out soon, which is around 19,650. So traders should remain positively biased today, and I'm expecting good days ahead for the Nifty and Bank Nifty as well.
Okay, absolutely. And Vinay, we should also look at some of these railway counters. I mean, look at IRFC, RVNL. These are also buzzing in today's trading session. We have seen a stellar run, but there's this consolidation that is happening when it comes to these railway counters. So, what are your thoughts on IRFC first? And of course, then we'll take ITI as well. ITI is, by the way, up 7% in today's trading session. It is the top PSU gainer for you at record high. So, first IRFC and then ITI.
Yeah, so these are the stocks which have done exceptionally well in last 3 to 4 months, and these are the stocks actually traders and investors are closely watching. And as and when we find stability in the market, these stocks used to come up. So we need to see how they are coming out with their quarterly results. But as of now, the primary trend is positive. Short-term trend is into consolidation. We need to wait for today's close. If today's close is convincing, then definitely stocks like IRFC, Ircon, and Rights Limited can be looked at, because primary trend is already positive, and if they sustain at this level and give some follow-up buying, then definitely this is the sector. Railway stocks and PSU railway stocks can definitely outperform. So IRFC primary trend is positive, but for short term, I would wait for some convincing close. And if it close around this level, or let's say for above 76, then it would give confirmation in that stock. So yes, as market goes, it is likely to give good returns. But I would wait for sustainability, and above 76 stock like IRFC can move well. And as far as ITI is concerned, it is clearly into momentum. So it has surpassed the previous swing high resistance of 214. Now 214 becomes the strong support for the stocks. So as per the change of voluntary rule, with one can traders can continue to hold long position with 214 stop loss in ITI.
Fair point you make. 19600 is with the bulls, Vineji. Now 91 points higher as far as the Nifty is concerned. This one is looking good. The second resistance is at 19664 as far as intraday plays are concerned, and the day's high is 1 second. Let me just check that. Is somewhere like 19640. So once 19640 is taken out on the charts, the 19600 call will become extremely potent on the long side, and that is what needs to be watched. Okay, let's shift focus on some other stocks. Just a moment ago, Vinay had mentioned Hindustan Aeronautics. The entire defense space, like I mentioned, because of the unfortunate circumstances in the Middle East, is now deep in the green. The top three shipbuilders, Mazagon Docks, Cochin Shipyard and Garden Reach, up between 3 and 5.2%. Midhani is up 1.6%. It makes special alloys for rockets, 406.16. Bharat Dynamics 2.6% higher, 1030. MTAR, BEL, Hindustan Aeronautics all up between 1.3 and 2.6%. Overall breadth in the market is extremely positive. 1650 stocks in the green on the National Stock Exchange, compared with just 231 that are in the red. As far as the NSE 500 is concerned, we have 425 stocks in the green, just 70 in the red. So it's bulls all the way on the Lal Street as far as Tuesday is concerned. But time to shift gears and get into the corporate part of our coverage. And our guest today is Mr. Anil Gupta. He is the Chairman Managing Director of a very, very well-known multi-bagger stock, KEI Industries. Namaste, Mr. Gupta. It's a pleasure to host you. And firstly, congratulations on what has been a fantastic journey of KEI Industries. Consistently a hitter of fresh highs, record highs, and a fairly strong performance when you see over the last 10-year period. The company is into cables, a very hotly contested space these days. Welcome, Mr. Gupta. Let's share your business outlook and how do you see your business shaping up over the next 2 or 3 quarters. A fantastic performance so far.
Yeah, good morning. I will talk in general because at the moment it is a cooling period and will not speak specifically on numbers. We have given in earlier interviews, I have given a guidance of growth of around 16 to 18%, in this financial year. And we are definitely on the track of achieving these numbers. The demand in the cable space is good and growing substantially because of the infrastructure push and investments in new industries which are coming up, infrastructure projects, roads, railways, metros, etc. And also a good traction from overseas markets also for products from Indian cable industry. We expect that all segments, all verticals of our business, of all product lines should do well. in this financial year and should grow as per the guidance.
Fair point. Apart from providing cables for all sorts of industries, whether it's energy space, whether it's the oil and survival space, a lot of other businesses that KEI Industries is into constructing of electrical subsystems, as well as the towers that you see dotting the railway, dotting the rural landscape, which connect electricity cables across states. Mr. Gupta, all parts of your businesses, by the grace of God, are doing phenomenally well. But which is one sub-segment where you see the maximum concentration of demand and a very, very strong business coming in from different geographies?
From 1 kV to 33 kV, low tension and high tension cables should be doing extremely well during this financial year, and the business is coming from all the user segments in this space. Similarly, due to investments in real estate, even houseware is also improving, and housewares and flexibles, and that space also should be growing exponentially this year.
Okay, absolutely. And Mr. Gupta, Tanya this side. Very good morning, first of all. And I want to talk to you about your distribution, because I think you are trying to scale up your distribution, diversification of your product portfolio. So if you could talk to us about that, and what are the internal targets that you are working in, and what's the outlook going forward, let's say for the next 12 months?
I think I have already mentioned our internal targets. We should be growing around 16 to 18% in this financial year, and similarly with the same growth numbers in the next 4 to 5 years. And I think we will be growing domestically in India, as well as improving our geographical export territories in the coming years, which is giving us strong traction and strong visibility of the demand for our products.
Okay, absolutely. Let's talk about your B2B segment as well, and of course about the export contribution. So how has that been like, and what is the target going forward?
Our aim is to reach an export target of around 20% of our turnover in next financial year, and it looks achievable. And otherwise, in domestic market also, we will be growing. So far as retail is concerned, retail is already doing well, and we expect the targeted growth of around 20 to 25% in the retail and B2C sales through our distribution segment. And B2B in all segments, whether it is domestic, exports, or extra high voltage cable, all segments will be doing extremely well in this financial year.
Okay, absolutely. And talking about your order book only, Mr. Gupta, the order book was almost 3,600 odd crores. So what is the growth driver? I mean, where is the growth coming in from, and what's the outlook going forward?
Our order book will continue to remain in the similar range, because when we talk of retail order book, we never include in this order book. It only consists of B2B and exports, and most of the orders are executed within 3 to 4 months. So the order book will remain in the similar numbers. So far as demand is coming from, I have already mentioned, it is coming from power generation, transmission, and distributions. Generation means mainly from solar power projects, and now even thermal projects, power projects are also doing well. There is a good expansion in refinery segment by India oil companies. So that is a good area. Then construction sector is doing extremely well. Then infrastructure sector like metros, rail, highways where overhead to underground conversion takes place. So all these sectors will be the major drivers for demand.
Right. Mr. Gupta, let's put on a pair of binoculars and look at about 1 year from now. Which parts of your business will see an expansion of capacity coming online over the next 12 odd months, and where exactly is this happening geographically?
Mainly LT and HT cable capacities will be fresh capacities will be coming up in next 12 months from our by doing brownfield projects in our existing plants, and around new capacities in this segment will be coming up 18 months, 15 to 18 months from now in our new capex plant coming up at Sanand near Ahmedabad, which is already the construction has already started. And the expansion is being taken up in Sanand in all segments of our business, like right from 1 kV to extra high voltage cables and LT and HT cables as well.
Fair point, sir. And one of the most defining features of KEI Industries has been its outstanding outperformance when it comes to the EBIT margin compared with peers at about 9.3, 9.4%, Mr. Gupta, and a net margin of about 6.9%. Would you sort of share your outlook on margin growth from here on over the next couple of quarters? They are substantially higher when you compare them to your rivals.
Our aim is to take it up to around 10.5 to 11% EBITDA margins, and we'll try our best to improve our margins by improving in the selling prices and cost control.
Right. Mr. Gupta, anything that you would like to add in terms of geographical expansion that's happening in your business apart from high tension wires?
We are doing extremely well now in Australia, in Middle East, in some of the African countries, and also now expanding in United States. So I think next year, US as a territory should do very good numbers to us. And also we are starting our exports in European countries as well, for which necessary certification process is on.
Okay, absolutely. On that wonderful note, thank you so much, Mr. Gupta, for taking the time out and sharing these wonderful insights with us and being with us here on Business Today Television.
Thank you. Thank you for inviting me.
So let's get back to the markets now, Shail. And I think Nifty's flirting with that 19,600 mark. And it's the auto day clearly today. Stocks like Tata Motors, M&M, they are among the top gainers for you. And Sensex also up around 280 points as we speak. So what are you looking in at, Shail, at this point in time?
Tanya, I think the first 45 minutes of the market have been extremely good for the bulls. We see a very strong traction in the advanced decline ratio. And as I had pointed out, as far as the options trades are concerned, we are looking at two options at the moment. The 19,600 call, which we had, on the Nifty for October 12th, which we had caught somewhere like 78 rupees, is now trading at, just a moment please, 19,600 in front of me. is trading at about 84.85. So that's a bump up that's happened, and of course the Tata Motors call on 6:30 ending for the month of October, that was looking at 14-15 rupees at the now 1370. So these are the two stocks futures that we are looking at, and very strong traction in the broader markets. The entire PSU basket is deep in the green. A lot of traction coming into a lot of defense stocks like Mazgaon, BEL, of course the other two shipbuilders, Garden Reach and Cochin Shipyard. ITI is taking it away. As Vinay mentioned, it's into super bullish category, now up 8.5%, 234. You had caught it at about 231. Strong moves coming into select FMCG counters, fresh record high on Colgate Palmolive 2029. So the market is in fine shape, and the only good part apart from the broader thrust that you see is that 19600 is now with the bears. I distinctly remember looking at the 19500 call yesterday in morning trade itself at about 9:15, and that trade is also working fantastically well. The call is now up at 150. We had looked at it at somewhere like 92, 93 rupees. So that's how options work, and you buy into momentum and you buy into quantity, and that's how you reap substantial gains. That's it from my side. Tanya, what are you looking at?
Absolutely, Shell. I think I'm looking at the levels only. 44,000 now for Nifty Bank, 185 points there, uptick there, and Nifty also hovering around that 19,600 mark. But with that, it's time for me and my team to wrap up this edition of Market Today. And thank you so much, Shell, as always, for sharing all these wonderful insights with us and being with us here on Business Today Television. So with that, it's a wrap. But you don't have to go anywhere. Just stay tuned for all the latest market updates, and many thanks for watching.
Gold prices have surged by over 1% today as the conflict between Israel and the Palestinian terrorist group Hamas escalated over the weekend, killing hundreds of people on both sides. As a result, people have rushed to buy precious metals like gold and silver because of the safe haven appeal. But will these gold prices